Hey guys, how's it going? Shane with Eastman Insurance Solutions, and today we are talking about the most overlooked coverages on your homeowners insurance policy. This is the follow-up video. Hopefully you got a chance to take a look at a previous video that we did on auto insurance. This is kind of the follow-up to that. Wanted to break it up, not to make the video too long, and nobody really likes to listen to insurance jargon for that long. But if you're landing on this video, that means you're a homeowner and you are concerned about making sure that you have the proper homeowners insurance coverages. Like I alluded to in the last video, this is something that I'm seeing more and more frequently as rate continues to be pushed more and more frequently, and people tend to skip over coverages, or even worse, buy a policy online. And they don't find out that they don't have the right coverages until time of loss, and then they find out that they're self-insuring. So what I did is I took a look at the most overlooked coverages, compiled a little list, and I want to break them down in a simple, easy simple and easy to understand manner. First, water and sewer backup. Very overlooked coverages. I would say 80% of insurance policies that I see do not have this coverage on. Flood or water losses are excluded from all insurance policies. Flood as well as earthquake, exclusion. And so what will happen is you don't have this insurance coverage. You experience a burst pipe or an overflowed toilet or backed up sink. The insurance company will cover a portion of it, but they're not going to cover the whole thing. And this tends to lead to a poor claims experience and feelings of, well, crap, why do I pay for insurance anyway? They're never going to cover me. And so purchasing this coverage, which is super inexpensive, will bail you out in those circumstances where you do have a water loss from, like I said, a burst pipe behind the sheetrock, or an overflowed toilet, or an overflowed sink. Water and sewer backup will cover you and help make that claims experience a more positive one, and it may cost you $30 to $50 a year to add this coverage to your policy. Extended replacement cost coverage. Huge issue here in California, especially with the fires that we've had over the last few years. When you write your insurance policy, the insurance agent or the company does what's called a reconstruction cost estimator. They are looking at what the building materials are, what the current labor rates are, and they come up with a number that says, hey, this is what we need to insure your home for. Extended replacement cost coverage gives you a multiplier of, it could be 10%, 25%, 50%, or even 200%, depending on the insurance company. And what that does is it gives you an additional cushion should you find yourself in a place where you've had a massive loss, like we've seen in Santa Rosa, and that jacks up the labor rates and jacks up building materials due to shortages, or you just haven't had your policy reviewed in some time, and the cost of things increases faster than your coverages are. So extended replacement cost is a huge thing to have, and I personally recommend having that at 50%, so that gives you an additional cushion, so you're not coming out of pocket at time of loss. Next one is replacement cost coverage on your personal property. I don't see this too frequently where people don't have this, just because of the way the insurance companies set it up. It's kind of an automatic thing, but I do see it from time to time where people have what's called actual cash value on their personal property. And what that does is it takes your property and depreciates it. So you have a 50-inch TV that you bought 5 years ago for $4,000. They take a look at things and they say, hey, based on depreciation, that $4,000 TV is now worth $250. Having the replacement cost endorsement on your personal property, you will get compensated on what it costs to go out and replace that 50-inch Sony in today's market. And so that is too minuscule to even calculate. It could be a couple dollars a year to add that endorsement on. Very important. Let's see here. Scheduled personal property. Huge issue that people really they take a bath on it because they don't know, and or it's been brought to their attention and they don't see the value of it. There are certain categories in your insurance policy where the insurance company will place a sublimit on those categories. So you may have everything is a percentage of the dwelling coverage. So your personal property coverage is typically 70% of the dwelling coverage. Let's say for the sake of round numbers, it's $200,000. You have $200,000 of personal property coverage, but in the areas of firearms, jewelry, cash, collectibles, stamps, cash. I think I already said cash. Insurance companies all place sublimits on those. It could be as low as $1,500. It could be as high as $3,500. But if your wife is anything like my wife, she's got jewelry. $10, $15, $20, $30,000 worth of jewelry that has been amassed over a lifetime, and people don't do their due diligence and schedule that. And at time of loss, if a fire rips through your house and destroys all your jewelry, you just lost, $30,000. By scheduling those items, it helps you in two ways. Because you're paying a premium for those items, it's subject to no deductible, and it makes the claims experience a lot more simple because everything is covered, everything is taken care of, and there's no argument or back and forth between you and the claims adjuster. This does have a higher impact on your premium, so I would advise taking a look at a risk versus reward type of thing. Schedule the jewelry, see what the insurance company comes back at. If it makes sense, do it. If not, at least at time of loss, hey, I'm self-insuring for these items. Next up, identity theft coverage. Cyber liability, theft of identity is rampant in our country. And having this simple endorsement it's really already included on a lot of policies. It's kind of intertwined with other endorsements. But make sure that you have this coverage. It's pennies. On your insurance policy, and it will provide you $15,000 to $25,000 worth of identity theft coverage to help you kind of navigate should your identity be compromised. Risk versus reward, not even a question. Make sure you have it on your insurance policy. And lastly, business owner endorsement coverage. This may be named some different ways on your insurance policy. But a business owner endorsement coverage or business equipment coverage. Listen, a lot of people are becoming, especially in California, a lot of people are trying to figure out different ways and different revenue streams, and a lot of people they have home-based businesses or businesses that they run out of their home. Listen, make sure that this coverage is on your policy. It's going to help you from a liability standpoint. It'll help you from a business personal property standpoint. It just makes sense to do. You're running any type of side business, side hustle, I don't care what you call it, out of the house, make sure you have this business endorsement. Last thing I want to talk about is what I'm going to call a bonus coverage. In my opinion, and this is just my opinion, take it for what it's worth, If you are established to the point where you've got a 401k, you're hyper focused on the future and making sure that your latter years are taken care of, you have investments, a home for sure. If you're watching this, you've got a home. Listen to me. You need an umbrella policy. It is the cheapest liability coverage that you will purchase, and I promise you, it will be there for you in your time of need. So listen, make sure if you don't have an umbrella policy, if you've gotten nothing else out of this video, call your insurance agent and ask them, hey, what is it going to cost me to add an umbrella policy, a personal umbrella policy to my insurance coverage? I promise you it'll be the best $200 or less that you've spent on liability coverage. Now, here's bonus. I also want you to ask them, does my insurance company offer uninsured motorist coverage under the umbrella? If you are a breadwinner, or if the family dynamic sets it up where one or the other of you is the breadwinner and you don't have accident coverage or a solid life insurance policy in place, I want you to ask about this coverage. Listen, statistically speaking, more than 40% of drivers in California are either uninsured or they're underinsured. The likelihood of you getting involved in an accident, getting hit by somebody who doesn't have sufficient coverage is very high. And again, if you don't have those ancillary accidental coverages in place to help replace lost income, if you get disabled or if you're out of commission for a certain period of time, I just ran a quote yesterday for a gentleman. It was $200 to add the umbrella. It was $240 to add the uninsured motorist coverage endorsement. So $440 a year gave him $1.5 million of uninsured motorist protection. That right there is money well invested, money well spent. So umbrella coverage, massively important. Uninsured motorist coverage, if the insurance company offers it, not all of them do. It's definitely something that you want to look into. Listen, I hope this helps. I hope that you've gotten some type of value out of this. I hope this sparks a conversation with your insurance agent. As always, if there's anything that we can do for you, client or not, please don't hesitate to reach out to us. We love to answer questions. We love to review policies. We're passionate about what we do, and at the end of the day, we want to make sure that you're taken care of. You've got the right insurance coverage in place. I hope this helps. I hope you got some value out of it, and I will see you on the next video.